Good morning, everybody. It's Tuesday, January 26th, 7:45 a.m. Prices of Bitcoin currently at $31,500. We're going to talk about Bitcoin price action in small timeframes and large. We're going to be talking about altcoins such as ETH and why I believe that there is a huge bidder on ETH that may alone drive up the price. Or if we do retrace in ETH and other altcoins, where do we go? And what does that mean for the market for the next coming days or for the next coming weeks? Additionally, we'll talk about what JP Morgan is saying about Bitcoin and USDT. We'll talk about the miners position index and why that's important. And finally, we'll also talk about all the things that have happened in the last week, just as a highlight from this tweet thread right here. So we can wrap up exactly where we are in the market and also understand where we're headed towards over the next couple of weeks. All right. So let's get to the analysis and let's do it. First things first, make sure y'all hit the thumbs up on the video that you're watching right now. It helps support our content and it helps broaden the reach to other people. Additionally, you can go to our website right now, thealphatrades.com, hit the products page, and go buy the Advantage subscription. $97 per month gets you 2 videos a day. The video that you're seeing right now, 2 of them a day, every single day. All right. Aside from weekends, I'm kind of generally taking those days off. Unless I see crazy price action, then I'll step in and I'll start updating my Advantage members. So my Advantage members are in this private community right here. We just call them Advantage members because you have the advantage, right? Which is getting my attention, getting my analysis pretty much every single hour of the day. All right. And then I post a lot of stuff in Bitcoin analysis, which is where I post analysis tied to Bitcoin, whatever I'm seeing in the price action, altcoin analysis, and then of course the trade setups that I'm watching and I'm taking in Bitcoin leverage long and short, altcoin channels right here, the altcoin traded channels right here, and then the DeFi area as well, DeFi analysis, DeFi spot buy, leverage long, etc. Right. So anyway, once again, make sure y'all go sign up if you want this kind of detailed information. All right. Let's get to it. Okay, so we have to start on the 15-minute time frame to give us context of this area right here, this range. Okay, a couple days back, I think on January 22nd or so, I stated to my members that if we are able to stay above 33,000, which is the top of this white box that you see right here, there's a very high chance that the first level we'll get to is 34,900. And if we break above that, we'll probably get towards 36.5. I also stated that if we break back inside 33 from this area right here, chances are pretty high that we're going to take out these red markers that you see down here, right? And in fact, that's actually what we did. We took out 2 of the red markers. Third one, we kind of came close, but then we start to rocket back up. And guess what? We got rejected right at that same marker again, right? Which is 34,900, okay? And then we came crashing back down, and now we're once again at that first red marker, okay? So what does this tell me? Well, this tells me that there's a larger range developing in this area. And as price tries to break out of it like this, it's getting sent back inside the range, like these times right here. So if price is getting sent back inside the range, we know that there's good amount of support bidding the price here. But is it strong enough to bid the price and push it up higher? Not yet. Not yet. Okay. So then what has to happen? Okay. Well, 2 things have to happen. We may spend some time in this range, and how we resolve out of this range will ultimately determine exactly what we're going to do further. We could resolve down, which is also very possible, or we could resolve up, which is also equally possible. Now, the upside, in my opinion, is a little bit tougher because we actually created a higher high up here, yet we still got sent back inside the range at pretty much a low, well, an equal low, if you will, right? This is a pretty equal low. So whenever that happens, it means that there are a decent amount of sellers up here, and they're strong enough to crush the price down, okay? if the sellers were not as strong, we could have done something like this and then started to push back up, but we didn't do that. So you have to recognize when the structure is actually showing you that there are equal lows being painted or higher highs or lower lows. All this stuff is actually meaningful because it shows you the resolve of the buyers and the sellers. Ignoring that would almost, willfully be ignorant of exactly what's happening in the market. And you might as well, just throw darts in the dark, right? But this is not the case, okay? At present moment, what the market is showing us that this is a low that's being held for the most part right here, as you can see, but it's getting weaker because we've hit it once, twice, 3 and 4 times now in the past couple of days. So if it starts to crack, we're probably going to start slicing down pretty hard. And so the first level that I'd be watching out for, okay, is 29,000. Well, technically it's 30,300 because that is also a very strong level. So I'd probably be watching out for that. But if that doesn't hold, I'd be looking for 29,000. Now this is where things get a little scary because if you start hammering away at the yearly open, which is supposed to be a very strong level, all right? Yearly opens, weekly opens, monthly opens are levels that I pay attention to, quite a bit. And they mean something because when a year opens or a quarter opens or a month opens, if the price is supposed to keep heading up, the bots and the algos are quick enough to start flipping that level into support. It's very immediate. You don't have to come back to that same level, multiple times unless you're going to break it. Okay. So the fact that we did this, that's enough. That's it. We don't need to come back and revisit this area so soon. Okay. But the fact that we're inching up closer and closer here, this is where I get a little bit paranoid. And that paranoia, obviously I'm hedged because I started to take some profit yesterday out of my altcoin positions, but I'm also in Bitcoin spot. I'm also in Bitcoin long. So it scares me a little, but I also have a cushion, large enough where I can absorb a deeper loss, probably more so than most people. And so the first level I'd be looking out for is this area to hold, 30,300. That doesn't hold, 29,000. And if that doesn't hold, this is where things get ugly because after that, I think it's going to be a straight slice towards 26 and a half, maybe 26,000. Because that's the last big consolidation period that we had previously. It's possible that maybe we bounce, somewhere like this, somewhere in the middle and then roll back up. It's not necessary that we have to go straight to 26 because the buyers at 26 could very well start rounding up price like this. It doesn't have to come all the way down here. Okay, so something to keep an eye on. Maybe we bounce at 27 or 27 and a half as well. I'm not saying we have to go to 26. I'm saying if this breaks, the next potential strong area is 26. So those are the levels I'm looking forward to. Now, personally, I was honestly hoping and thinking, not just, blind faith of hope, that this candle, this red candle that you see when it was up here, I was hoping we'd close up there and that the following couple of days we'd start pressing up higher, at least take out 38,000, which is, the highs up here, or possibly around 40,000, which is the high above this. But we didn't do that, right? So the fact that the sellers keep aggressively selling and the buyers can't even drive up price for a short squeeze, well, then it should tell you who the stronger hand is in the market. It's the bears at present moment. This is, of course, not to ignore the massive, massive trend that we've had over the last several months. This is undeniably strong, and it's still undeniably strong even in this area. However, there are times in the market where the market will show you clear signs of price deterioration, a potential larger consolidation or a larger pullback that's going to come at play. And if you don't heed to those warning signs, you'll pay the price. You'll either pay the price by being caught flat-footed in the wrong position or being too heavy in the long side, literally at the top, and then the market pulls down another 10, 20, 30%, and then you have to grind it out for the next few weeks, few months, right? These are the mistakes that most people make in the market. And so, the fact that I didn't want to make those mistakes, I did a few things, which was I started to trim my altcoin exposure across the board. And I mentioned this to my Advantage members over here. Okay, I wrote a big note about how I'm de-risking in the market, you know, how there were bearish divergences being seen in the market, volume divergences, market sentiment aggressively bullish, even in the face of Bitcoin and other markets showing all this bad stuff. And then, of course, macro factor uncertainty. Now, I'm going to talk about the macro factor uncertainty, not because you have to listen to me, but listen to people smarter than myself, which is a company that I follow. It's a hedge fund from Singapore, and it's called QCP Capital. And if you listen to this thread right here and you read it, you'll get to understand exactly why they are also careful. Now, these people are trading with, close to half $500 million or close to $1 billion, right? I'm pretty sure they're going to be careful in the markets as well, not to put their clients' money at unnecessary risk. And so if they're not putting their clients' money at unnecessary risk, well, what are they doing exactly? Well, it's mentioned in this thread that they believe that the market is ready, quite possibly, for a pullback. And they mentioned that this pullback may actually last maybe till the end of the quarter, meaning March. And additionally, they talk about how there's institutional exhaustion. Now, we in the crypto space, of course, have been very positive and bullish in the market because institutions are FOMOing in. Of course, they're FOMOing into Bitcoin. Now, these guys did a time zone analysis where Bitcoin breaks into Asia hours versus US hours, 12 hours each. And since March last year, the clear pattern has been relentless, where US has been buying while Asian whales and miners have been on the offer, meaning they've been selling. Okay. However, after BTC topped 2 weeks ago, which was over here, okay, so right around, I don't know, 6th or 7th or 8th of January, right? The strength in the US hours has lost momentum for the first time. See, this is their chart of how they identify the money flows in the market, identifying strong bid in the US hours. Okay, why is it important that the US hours are something that they need to keep a track of? Well, because the US hours are generally Monday through Friday, right? 9:30 a.m. to about 4 p.m. Eastern Standard Time. And if that time frame is lacking a bid for Bitcoin, meaning we're not seeing strong buying activity in the market during those timeframes, that is the clearest sign, aside from money flows, that the US institution exhaustion is happening, meaning the people who are primarily driving the bull market have come to a pause. Now, the pause doesn't necessarily mean that we have to just dump straight down, but it does mean something important is happening, which is the biggest buyer in the market has stopped buying. So you can clearly see why that would be a sign of caution, not only for Bitcoin, but also altcoins. Because guess what? Altcoins benefit off the risk on and money flows off Bitcoin. So when Bitcoin is doing well, altcoins generally do well too. Okay. So anyway, make sure you guys read this, right? This is from people that I generally follow. I regularly follow and read their information analysis. So I'm definitely listening to them. But aside from that, it's not that I'm blindly listening to them. It's that I start seeing signs in the market. And I mentioned this even to free members, right? Which is people on Twitter. I talked about this area right here, which is ETH quite possibly be struggling around $1,500. Okay. And I talked about this when ETH was at 1450. ETH is now at 1286. Why did I talk about that? I said that ETH could probably struggle right near $1,500 because the last 2 times we had these sort of 3 drives, where we had 3 up movements like this, 1, 2, 3. Both times we pulled back. 1, 2, 3, boom, right? Now the pullback, once again, doesn't necessarily mean it has to be like this, nor does it have to be like this. For all I know, this might be the pullback, and from here we might go straight up. It's also possible, however, that we might have a deeper pullback and we might dump towards these support levels or these support levels, or maybe the SR level around $800. I don't care how far it goes. My job as a trader is to start de-risking when I start seeing warning signs in the market. See, when you've traded long enough and you respect the signs and the warning signs and the criteria that's meeting your warning signs in the market, you start taking money off the table. Why? Because you don't want to put excessive risk on the table just to make a couple extra bucks. It's much more important to save money when you're starting to see warning signs than to think how much more money you can make. Because if you get into the thinking of getting into markets and thinking you have to keep making money and that ETH has to keep going up, or from here we will go straight up, and you don't start de-risking, especially in warning signs, well, more often than not, you'll probably lose money over your career. And so this is why some of these rules are followed by the biggest professionals, whether it's Warren Buffett to, people like Jamie Dimon who run their institutions, to Paul Tudor Jones, to Stanley Druckenmiller, all these guys, right? They have certain rules where they start de-risking in the market when the market is pushing you out further on the risk curve, right? And there are times where the market will do that. It's going to try to lure you in, and it's going to make you think that prices are going to keep going higher, but it's going to flash warning signs with that. But if you ignore those warning signs, yeah, it's possible you might make some money to the upside. It's also possible that those warning signs are real and they're flashing for a reason. And they're giving you an out, but if you don't take that out, well, then prepare for the consequences. Okay. So anyway, what I did was I started de-risking across the board. I mentioned this to my Advantage members. All my positions I've told my Advantage members about, and we pretty much sold right near the highs, right? For ETH, we started selling around 1370, 1380. For other altcoins, we also started selling right near the highs as well. And so I'm pretty happy with that decision. But now the question is, right, you're probably wondering, well, so what, right? Markets have been going up consistently. See, I think that is probably the most scary part, that people have this mindset that's been ingrained in them that the markets have to keep going up, and from here the bid will be higher. And to be honest, I'm kind of on that same mindset too. I think nothing has really changed in the macro, right? For example, I wrote up this thread at the beginning of the year. I talked about checklists for investing and trading in 2021. Are interest rates low? Yes, they are. Is the dollar printing press on? Yes, it is. Is high beta and growth outperforming value? Relatively, but still, yes. No Fed policy changes? Nope. I mean, we're continuing on the same monetary policy path, right? We're going to have stimulus. And I'm talking strictly from the perspective of being in the US, okay? So being in the US, no policy changes, right? Whether it's a new Fed chairman, new Treasury chairman, nothing is going to change. Unemployment not too high, not too low. Not going to discuss this too much, but again, yes, right? So all in all of these bode really well for crypto and for US equities. Why? Because we're in this perpetual cycle where money has become not only devalued, but cheap in a sense. Cheap means that the government and the Fed and the Treasury are all working together to basically tell you that, hey, it's okay to take risks. We got your back. It's okay to put more money in the market, in the stock market, because we are going to put a floor on it. We got your back. We're going to keep printing money and keep giving it to corporations and companies and people. We got your back. See, all these things tie into why it's beneficial for the Bitcoin market as well. Because Bitcoin is benefiting off that same risk, meaning the risk on environment where investors and hedge funds and traders and everybody alike, right, they get paid to take that risk. Meaning the Fed is saying, the government is saying that we're going to put a cap on the market. If the market starts bleeding aggressively, we're probably going to provide more stimulus. There's going to be talks of easing more monetary policy. I mean, interest rates are already super low. I don't know what the hell else they can do, but they can always come up with something. So I believe that Bitcoin for the rest of the year, going into 2021, I still think that it's going to be a bullish market. But does that mean that we don't come down another 10, 20, 30% from here, consolidate, maybe for a couple of months and then start making our way out? See, that's where I don't know, right? Because we've moved up almost 100% from the previous highs, meaning 2017, when we put in the 20K high, we moved up double that, all the way to about $42,000, right? So it's possible that we retrace some of that. Okay, maybe we even retrace all the way to 20K. I doubt it, but it's possible, right? You should always hold these possibilities in your mind. Because if we do pull down, guess what? You'll once again get the opportunity of a lifetime to get into Bitcoin. Because most people, when the market starts pulling back or when it starts, really dumping hard, you really get scared and you start selling on the way down. Most people don't sell on the way up because they're greedy. You want more money. You want more gains. And so you hold on to that risk and you don't start taking profit. You don't start de-risking. You don't start taking money off the table and you hold all the way down. And guess what? On the way down, you don't have free cash. You're actually scared and you're, pissing your pants because you don't know where the market is going to go. So at the very least, if you would have de-risked up here, or in ETH's case, right, if you would have de-risked on any of these highs right here, you could have now had opportunity to buy the pullback. Okay. So this is where, the importance of managing your risk properly, taking money off the table helps you in the long run. It's not just about making more money, because I'm sure we all can in the crypto market going to 2021. It's that these skills are something that you can take with you forever. And this kind of skill set, which is being able to de-risk, not wanting to take too much risk, not wanting to be greedy or FOMO into things, applies to life. It even applies to starting businesses. It applies to something as simple as poker or gambling. Okay. So anyway, didn't want to lecture you guys too much, but I hope you guys find the importance in this kind of note. This is the kind of information that I provide for my Advantage members. Once again, I'm not out here to start talking about this is the top, because honestly, I don't even think this is the top. I still continue to believe that there is a final momentous move that I'm personally waiting on in the market, which the way we're going about it right now might actually happen quite possibly by the end of the year, which would be perfect, because what you may have is, say, I don't know, let's try to identify this, right? So you guys know very well, if you've been watching my videos for a while, right? I talk about there's generally three slopes or three waves in market movements, both up and down, right? So you have, a movement like this, and then you have a movement like that, and then you have just, straight up vertical movement, right? So price kind of traverses around this and moves like this and like this. And then it starts getting more and more bullish and like this and like this. And then it starts getting aggressively, bullish like this, and just goes vertical, right? So in these three paths, okay, it is quite possible that as price pulls down, we're once again going to be on this bottom arrow. And that might happen, going into the end of Q1, which is March. So we might do some more of this kind of stuff. And then starting April, going into the summertime, then we might be doing something like this for BTC. And then going into the third and fourth quarter, then we might be doing, some rocket-like movement like this. And I think that applies to altcoins as well. I think altcoins are going to go bananas too later this year. And, once again, there are certain altcoins that I've been continuously watching. I've told my Advantage members exactly, what my positions are, what I'm holding. And even though I start to take off risk, I'm looking to just buy back into some of those same positions at a cheaper price. Okay. And even if I have to pay a higher price, and once again, that is a possibility, right? Because de-risking sometimes comes with the possibility that you may be wrong. But that's how de-risking works. It's like, if you start driving in a car and all the time you're never wearing a seatbelt, but then of course, you could tell people, hey, I don't need to wear a seatbelt because I never got hit by a car and I never died. Well, one day, eventually, you might be wrong, and that seatbelt might help you, right? So the point is, even though it's uncomfortable to wear the seatbelt and all, it's for your own safety. It's for your own security. Okay. And sometimes I see profit taking almost as similar as the seatbelt attitude. And same thing with stop losses. It's kind of the same thing. Your stop might get hit and market might go up right after it hits your stop. But point is, sometimes the market doesn't go up after hitting your stop. It just keeps going down. So that's why you have that seatbelt or that safety net to help you get out of the market. So anyway, once again, make sure you guys hit the thumbs up if you do enjoy our content. Please do join our Advantage community right here. All right, so let's talk about altcoins, right? What exactly is happening in the altcoin space? Now, someone pointed out to me on Twitter that there was some huge buyer, like a huge whale buying a shit ton of Ethereum. And you can see that evidence right there. There's someone who had like a bid of I think 75 or $100 million right here on ETH. So let's check that out, right? Like, what do we got? See, here's the buyer. I mean, this buyer was massive, like 3.7K, 7.6K, 5K, 6.6K. All in all, this is about, was it 10, 15, 21, 22-ish K. So 22,000 times, what is it, 14 or 1,300? Right, so this is about 28,600,000. Okay, $28,600,000 buying just went into ETH from the level of 1306 all the way down to 1,300 flat. That's pretty good. That's a lot of buying activity, but hey, that's a good price for whoever got in. Now, hopefully, that person is right that this area right here hopefully is a bottom, and that we don't start moving down from here, because guess what? If this person starts puking out their position down, you're going to have a $28 million ape trying to sell on the way down. That's going to be bad. That person is going to keep forcing the market down and down. And that might take us quite possibly towards 1,100, maybe 1,000, right? Because other people are going to join in the frenzy. Because when a $28 million ape starts selling, other people recognize that, and they're going to start front running his ask, meaning his sell order, and they're going to sell and sell and sell, and it becomes a cascading effect. So hopefully this person is right that this is the bottom, and we're just going to simply put this deviation in and start pushing back up. Personally, I don't think ETH is going to hold up around here. I think ETH is probably going to chop around, probably do some garbage like this, maybe quick wick down and then start pushing back up. That's my thought process. But again, I could be wrong, right? Obviously, this person who has 28 million clearly knows what they're doing. Also, by the way, sometimes they don't. Sometimes people buy in at the wrong time, and then price starts bleeding right against them, and then they get their bots and their algos to start de-risking, and then they start selling on the way down. And that's why you get big flushes in the market. Not because retail is out there selling, but because retail paired with a guy like this who bought $28 million worth, bought at the wrong time. And it's very possible that people do buy in at the wrong time, even a $28 million whale. Okay. So, once again, ETH, right? Here's my thought process on ETH. Okay. So I believe that ETH pierced through its previous high. Okay, now that's a very good sign, but of course it's going to struggle a bit here. It's not like ETH was expected to just blow right through this. All right, I think we all knew that as it started approaching $1,400, it looked a little bit weak. It looked a little bit like the sellers were kind of strong, and that's okay. There's nothing wrong with that. Even if we chop around here for a few weeks, we do something like this, maybe we pull back and then start pushing back up. That's a very good sign, in my opinion, for ETH. Okay, because if you start consolidating here near the highs, holy crap. I mean, it's going to be incredibly bullish for targets to the upside. Like, if we simply did, say, a fib extension from previous high, right, to say this previous low, right? The fib extensions, 2.0 extension, we should be getting towards $2,700. That's why I have this flag here, by the way, because that's one of my big targets, 25 to 2,700. Beyond that, the 3.0 extension is $4,000. Even if we simply went for a 1.618 extension, it should be about 2,200. That's huge gains. I mean, even if, say you're long now from here to here, that's a 75% gain. A little bit higher, right? That's 200%. I know people out there have targets for $10,000 ETH. And even though I think it's possible, I don't know if it's possible on this cycle. Like, I think it's possible that, we do something like this, we come all the way up here, and then maybe next few months, maybe next year or two, we do some garbage like this, and then start pushing back up. Not necessarily that we have to come down here. For all I know, maybe we only pull back to like 500. And from here, we start bouncing up, right? And so we do this going into 2022, 2023. Because when you have aggressive bull markets like this, right, if you want a higher ceiling going into the next 2 years, 4 years, 10 years, you want, big multi-month, multi-year consolidations, and then, put in a higher ceiling price. Okay, so it's very possible that ETH hits any or all of these targets, but I'd probably say, we might be capped somewhere between the 200 and the 300% extension right here going into this coming cycle, meaning the end of 2021. And that's between, 2,500 to about 4,000. That's pretty solid in my opinion. FTT, which is one of my bigger holdings. And of course, this is one of my favorite altcoins because I really, really think this is an altcoin that is slept on. Like, people are not paying attention to what FTX and FTT is doing. And if you are a fan like Sam Bankman-Fried, like I am, or you like FTX as an exchange and all the amazing things that they're doing, FTT is the token that I want to be in. I'm not telling you guys to buy, but this is my favorite token. And the thing is, from here, right, if we get a few weeks of consolidation, my goodness, I mean, the ceiling to the upside is probably at least 15 to 20 bucks. That's what I'm aiming for. And guess what? I'm already up 100%. My entry was 505. This is all recorded with the timestamp and everything, right around end of December. I told my Advantage members, and a lot of them are also in from $5. So you could see, I'm not really worried about FTT pulling down. If it pulls down, I'll buy some more. Okay. ETHBTC as a ratio, I think it's going to struggle here a little bit. I spoke about this in Twitter and to my Advantage members, right? So ETHBTC, as we very well know, it's basically a ratio of ETH prices moving in correlation with BTC prices. So the ratio goes up if ETH is moving up at a higher percentage than BTC. That's the simplest way to explain it, right? The ratio will go down if BTC is then moving at a higher percentage and ETH is kind of trailing behind. Okay, so at present moment, it looks like ETH is clearly dominating this area, and it looks like it wants to go higher and higher and higher. And so if it's going higher and higher, where should I be paying attention to? Well, the first marker, aside from this 0.04 level, which it's struggling at right now, is 0.05 and then 0.067 up here. Okay, I believe both these levels are easily attainable in the next few months after we have that consolidation period. And especially by the end of the year, I fully expect ETH to be at least near 0.06, maybe as high as, 0.1. Okay, meaning, if Bitcoin is at 50,000 and the ETH BTC ratio is at 0.1, I expect ETH USD to be at 5,000 because it's 10% of Bitcoin's price. Okay, so that would be incredible, but that would mean BTC has to get to 50K. Okay. So, obviously, JP Morgan and Jamie Dimon, I mean, they've been going back and forth. I feel like it's like a very bipolar relationship. that JP Morgan Chase has with Bitcoin. They keep going, back and forth about higher prices, but then on the backside, they criticize all the things that are happening. Now, I will say that some of their claims regarding Tether are legitimate, some of them are not. I personally believe that there are signs of caution in Tether, but it's not to the point where, I never want to touch Tether or anything as such. It just means like, yeah, there's some shady stuff here and there, but there's also a lot of shady stuff in other parts of crypto. It's a new space, and we're trying to figure out how other people can understand this space in the context of their laws and their reality, right? How they understand technology and innovation. And sometimes other people won't. Okay, you'll just get constant criticism and no appreciation. And that's also okay, because guess what? At some point, they will buy in, and they'll buy in at much higher prices, which is okay with me. But the point is, I think this is one of the things, the USDT thing, that's kind of shaking up the markets. It might be FUD or it might be real, but clearly, it's weighing on the market in some way. The market itself is probably getting pulled back by people in Asia selling, institutions in the US not buying. Maybe the new administration may not be as crypto friendly. It could be this USDT Tether FUD. Someone knows something that we don't. It could be any of these things, or it could be all of these things. Okay. But the point is that if you are someone who can understand the structure of the market and you have managed your risk going into 2021, you'll know what to make as a decision, what to buy, where to buy it, how much to size in, how much to size out, etc. If you have conviction in the space, right? And I do, and I believe that 2021 is going to be a great year. I'm still long. Okay, I'm not going to be shorting this market anytime soon unless we start seeing just a weekly complete deterioration. Then I'll start considering shorting the market. But until then, I see amazing opportunities across the board for buying the dip. Okay, so I've got cash freed up, like I said, because I started trim down my positions. The question is, are you making the right decision? Okay. Anyway, that's all I got for y'all. Everything else, I think this is relatively simple. You guys don't understand, right? The miners position index is at an 8-year high, meaning miners are actually moving Bitcoin onto exchanges and they're looking to sell. Generally, this is not a good sign because you get, supply pressure on the exchanges, supply pressure on the market, and price pulls back more, right? So not the best sign, but once again, right, keep that in context of where we are in the market. Like I said before, I'm fully prepared for price to come back towards 26 or 27K. Okay. I almost expect it the way this kind of crap is looking right now. I'm almost expecting for the market to dump that much. All right. So make sure you're prepared. All right. Hit the thumbs up if you enjoy our content, folks. It's been a long video. I know it's a lot of information, but do hit the thumbs up. Leave us a comment of your thoughts and join our Advantage membership, guys and gals. We're welcome to both women and men, and we actually have I think close to like 6 women in our group. Hopefully we get more. So if you're watching this video, do come join wherever you are in the world, whether it's New Zealand or India or South Africa, Netherlands or America or Mexico. We have people from all over the world. All right. So come join our group. We're a very friendly bunch. Until then, I'll catch up with you soon. Cheers.